Hello, my name is Steve Bigelow with the Candlestick Forum. We're still seeing a indecisive market trend. Well. The NASDAQ, as you can see, is doing a J-hook type pattern that if it opens positive on Monday, we might have still another strong uptrend. The Dow has been waffling right here at the T line. So it's still in an indecisive stage, but this is still allowing for a lot of candlestick trades to work very effectively. This week, it's the Doji sandwiches that are working. A Doji sandwich is a strong up day, a day of indecision, a Doji, and the simple Doji rule, which is prices are usually going to move in the direction how they open after a Doji. And when they open positive, even for day traders, this is an excellent trade setup in the sense that this candle right here will usually be the same magnitude as this candle right here. We'll probably be recommending laser because of the McMuffin pattern. A McMuffin pattern is the morning star signal, big down day, a day of indecision, then a big bullish day that closes more than halfway up this candle. This is one of the 12 major signals. Now, if you have a morning star signal, which implies there's going to be more upside, and then you have a Doji sandwich, which implies there's going to be more upside, you're getting a double dose of confirmation that the bulls have taken control. We call it a McMuffin because you have a morning star signal followed by a Doji sandwich or your morning sandwich. When you see this type of setup exactly right on a support level, this is the bullish flutter kicker signal, which is a very strong signal. It's a down day, and then they gap it up above the previous day's open, but they do a Doji. And again, we use the Doji rule, that if they open positive, they're going to trade positive, giving you a bullish candle, that if you took out this little flutter, you essentially have a kicker signal, which is one of your strongest candlestick signals. You add the fact that it did it right off the 200-day moving average that everybody else is watching, that's just additional confirmation. Now you have a Doji, and if it opens positive, what can we expect? The Doji sandwich confirming all this. It's just a high probability trade setup. This is nothing more than the way human nature reacts and creates these signals time after time. So if you've got a Doji sandwich, which implies more upside, this is what you call 2 plus 2. If you can see a pattern setting up, such as the fry pan bottom, and what do we expect coming out of a fry pan bottom? A strong price move. What do we expect after a Doji sandwich? More upside. Just additional confirmation that you're in the right trade at the right time. Morning star signal, smack dab off the 50-day moving average. This is what we call convergence analysis. You can see there's a trend channel. You can also see that it's a morning star signal off the 50 that had acted as support before. And now you've got bullish confirmation with it closing above the T line. You add all that together, where's your next likely target? Back to the top of the channel. And our big mover on Friday was OCGN, again, because of the scoop pattern. It traded up huge until late in the day. They announced they were putting out a new stock offering, but it looked like a private placement. It meant that the stock was already placed. It dropped the price all the way back down to the 963 level. However, after hours, they were kicking it back up to 11. This has still got the prospects of a scoop pattern giving you a strong upside. So there's still lots of good trades in this market, even though the market direction is pretty indecisive. I don't know why this thing keeps doing that. So as long as the indexes continue to trade above the T line, the probabilities are that we're not in a downtrend. We might not yet be in a strong uptrend, but this still allows the candlestick investor to identify which signals or patterns are going to produce strong price moves in spite of what the market is doing. That'll be it. We'll see you in the chat rooms.